3 names, all under $5 with lots of upside ahead. Joining us now with this list of 3 penny stocks to buy is MarketBeat analyst Chris Markoch. Chris, I love doing these videos. These are the early buy or buy the dip opportunities that have 3 names that are now right under that $5 mark. Talk about how you put together this list today before we get into the 3 names you have for us.
Right. So, obviously the markets are being very volatile right now. So what I was looking for was penny stocks. And for the purpose of this video, we're talking about stocks under $5. So, some don't fit the classic definition of under $1, but all of them are under $5. And I was looking for stocks that had very positive analyst sentiment. And I came across 3 names. A couple will be familiar to listeners who've been listening to this channel for a while. One might not be. And they all have very high projections for a consensus price target above where the price is right now. And they all have an interesting story to them.
I think that's what people who like these kinds of stocks and like these kinds of videos just like to hear some new names and interesting stories or business concepts that have some potential.
Yes.
I think what's rare about the stocks, when penny stocks don't get a lot of analyst coverage,
Right.
there's not a lot of price targets put out on them. So getting 3 names that have enough analyst coverage to have some expectations of where these companies could be headed, to actually look at that side of the story of these stocks is something unique. And that is why this list is interesting. So let's get into it, Chris. Let's get to the first stock that you have for us today that's under $5 with lots of upside potential ahead.
Yeah, so the first stock we're talking about is Grab Holdings. Ticker symbol is GRAB, G-R-A-B. We've talked about this a lot on the channel. I know Thomas Hughes has talked a lot about this. He considers this to be one of his favorite stock picks for this year. This is a story about, it's an e-commerce meets technology, meets everything else. The company has an everything app of Southeast Asia. It just turned profitable for the first time, and analysts are projecting about 54% upside for the stock.
Yeah, I think this name is interesting. And like you said, it made Thomas's list of stocks he's watching for the entire year this year.
Yeah.
And I think part of it that's interesting here is it gives you some exposures to a not just US-based company.
Yes.
This gives you some, diversification with international markets. And let's talk about Grab. I know it's also kind of like Uber, and it does the e-commerce stuff too. It does a little bit of everything. Why
Right.
are we seeing the stock down right now with all of the diversification of this business?
Yeah, I think you're seeing it down right now because, again, these are penny stocks. It's trading at $4.08 a share. These are companies that are small, they're tiny, and when the market's doing what it's doing right now, these certainly don't fit in with what many investors would feel like would be that flight to quality. However, if you're looking to play in this penny stock area, this is a really interesting name to watch because it's covered by 7 analysts. That's quite a bit for a stock of this size. And they're projecting that it could have a price as high as $6.47. That's the consensus target. And so I think right now it's just being weighed down by just the overall negative sentiment in the market.
Yeah, I think that's a good point with this one and several of the names that we're going to get to on this list that are down right now. And I think that's just their overall general downturn.
Right.
I do want to talk a little bit more about the company specifics for Grab. It's still, a lot of times we talk about penny stocks. These are still early enough companies. Is this company actually producing revenue, and is that revenue expected to grow?
Yes, actually, that's one of the very interesting things about the company is it is generating revenue. Not only is it generating revenue, but that revenue has been increasing on a year-over-year basis as well as a sequential basis. It reported earnings in the middle of this month, I believe. Yeah, it was on February 11th. It had a slight miss on the top line, but that number was still higher year over year. And here's the more exciting thing if you're an investor. A lot of the stocks that you talk about that are under $5 are companies that are not profitable yet. Grab just recorded their first full year where they were profitable on an adjusted EPS basis. And from what I'm seeing, they were also profitable on a GAAP basis, although that was much smaller. But that's the exciting thing is you've now got a company that's growing revenue significantly and it's now positive on earnings on a year-over-year basis.
I think that's a really interesting company to look at right now because it's not your typical really risky, really high risk, no proof in the pudding kind of penny stock. This is a company that's functioning, it's continuing to grow, and it's already getting that revenue coming in. So an interesting first company to look at. Again, if you want to go back and watch more of Thomas's analysis on Grab, I'll link that video in the description too from our early start of the year conversation where he went in depth on what he's thinking about Grab's outlook for for 2026. I also want to share, if you're really interested in more of these small cap names that are growing, they have that revenue coming in, and they have a lot of potential outlook, make sure to check out this special article we have just for our YouTube viewers. It's on MarketBeat's top 5 rated small cap stocks. Again, these are all companies that are smaller, that are growing well, and have really strong ratings for the future. You can scan the QR code. And again, I will have a link in the description if you want to check out that article and do some more research on these small cap names. But Chris, let's move on to the next name on your list of stocks under $5 right now with a lot of upside potential.
If you're a true believer in penny stocks, this one's for you. This is Vaxart. It's a biotech company. You're going to find a lot of biotech companies in that penny stock range of $0 to $5. This one's a true penny stock. It's as you and I are taping this, it's trading around 68 cents per share. The trade-off on that is it does not have a lot of analyst coverage. This is one that doesn't have a lot. It's only got one analyst that's giving a price target to it. However, that one analyst gives it a price target of $2, which is an increase of 195% from its current price target. And the reason why that analyst may be excited about it is because you have to look at the company's pipeline. It's got several drugs that are in the clinical stage process. Some are in stage 2, stage 3. Some are still back at stage 1. But what the company is attempting to do is come up with oral vaccines. And of course, we all know what the potential for that is. It takes away the immediate fear of the needle fear. But also the company's finding that the oral vaccines, because of the way they're administered, because of the way they enter the body, they could provide a broader immune response than the traditional shots do. Right now, the drugs that are the closest to being approved are for things like influenza, the flu, the norovirus, and also COVID-19. But again, if you get any of these that can get through the FDA process and get on the market, that could be a big boost for this company, because that's just not an area of the market that's being covered right now, is this oral vaccine category.
Yeah, really interesting concept, but I did hear a lot of ifs in there. And that is the thing about penny stocks that I think is important to talk about. These are still risky, right? This concept is interesting, but it's not proven yet. It's not bringing in the revenue yet. And I think that shows up in the chart as well. This one in particular has had quite a bit of volatility, a lot of quick ups and downs that we also see in the penny stock market. So let's talk about those expectations a little bit too when you get into a stock like this, the risks that are associated with it too.
Well, one of the risks that you're going to get to, especially when you get to a stock like Vaxart, which is a true penny stock, is you're going to have a lot of people that are investing in it that are going to be true believers in what they see as the future. But then you're also going to have a lot of speculators that are just to play around. And stocks can go up just as fast as they can go down, especially when they're penny stocks. Now, this stock doesn't necessarily have a lot of short interest on it, but you've got a lot of people that are just going to be in there to try to make a quick trade. So if the stock's at 68 and they can get it up to 70, that's fine, and then they're out. But that's going to create volatility in the stock price. So you're going to have to be aware of that going in. You're going to have to really decide, are you in this as a trade, or are you in this to buy and hold for a long time? And if you're in there to buy and hold for a long time, you're going to just have to basically tune out a lot of the noise and focus on things like what's happening with the FDA events. Are they moving closer? Are they getting through these trials? So far, it looks like they've got several candidates that have been advancing along in the trials. That's encouraging. It doesn't mean that they'll actually get there, but the fact that they've gotten this far through the trial is encouraging.
Yeah, that's what I want to ask a little bit too, is just the nature of biotechs as well. How confident are you in those FDA events continuing for this name? Is it still really very early for this one? And let's talk in general too about specific to biotechs, penny stocks. What's the risks associated with these as well?
I think I'm as confident as I would say I can be. I mean, what we're talking about is, it's something that could be an alternative to the flu shot. It's something that could be an alternative to the COVID-19 shot. So these are things that are out there. It's something that I think the FDA has really good data on and really good efficacy data on. So I'm pretty sure that if they've advanced the candidates this far, they're pretty confident that they can get them through. But having said that, the trials in and of themselves take some time. It could be still well over another year or so before Vaxart has products that are in market, which means that's going to be where they start generating very meaningful revenue and start obviously moving towards a path to profitability. And if they get sidetracked anywhere along the way, that can impact the stock price. But again, these are stocks you have to have conviction on if you're going to be investing in them.
Yeah, again, the concept of taking a pill instead of getting a shot is
Yeah,
really great, especially thinking about young children. That seems like
exactly.
a much easier sell. So I think the concept is solid for sure. But those sidetracks you talked about, that's a real thing. One thing goes wrong in a trial and the stock can tank. There's so many different headlines or different results from these trials and the FDA events that can really impact these biotech stocks. So just be aware of that as you're looking at this
Yeah.
name. But if you like the concept and you think the idea of taking pills instead of shots for vaccines is a solid one, I think this is a really interesting company.
Yeah, one final thing I'd like to bring up, Bridget, is so the stock only has about 18% institutional ownership, which is very tiny. But the one thing that I noticed about it was the total institutional inflows in the last year, as opposed to the institutional outflows, is pretty massive. I mean, we're talking like 10 to 1. So there might not be a lot of institutions that are buying into the stock right now, but the ones that are buying. They're not selling. And I think that's something that's encouraging because again, you wouldn't be seeing the big money investing in the company if they didn't think that the products had a chance to get through the FDA approval.
Yeah, I think that's a really good point, Chris. Well, all right, let's get on to the third name on the list. And before we get to the name, I'll just share right away that this is the one I am the most interested in, and I want to add it to my Bridget's Buys watch list.
Wow. Okay.
If you've not followed along to Bridget's Buys, this is how I kind of keep track of all the stocks we talk about on this channel. We have a video come out every day. We usually talk about anywhere from 3 to 5, maybe even 10 stocks. And I try to pick one from every video to add to my paper trading watch list on MarketBeat.com. It's a great way to follow along and track how some of the stocks we talk about on this channel are doing and changing over time. So I want to add this one to the list because I think the entry point right now is really interesting. I'm also just personally interested in this company, although I've never actually used it before.
So the company here is ThredUp. Ticker symbol is TDUP for the people that are familiar with it and for the ones that aren't. This is a company that's basically an online consignment and thrift marketplace. Think about like eBay meets Goodwill, and it's all designed for the idea of the person that's looking for the secondhand items. It's very popular among the millennials and that coveted Gen Z demographic. And I was surprised to find the stock on this list, not just because it was being so heavily favored by analysts, but to look at where the price target is compared to where the stock is right now. As we're taping this, Bridget, the stock's trading at $4.71 a share. So it's still in that category of a penny stock, but maybe not for much longer. But the consensus price target is $12.50. That's as we're doing this video, that's a gain of 165% in this stock, and that's a 12-month price target. And the stock's covered by about 6 analysts. So again, for a stock this size, it's being covered by a fair number of analysts, and it's got a really nice upside to it.
Yeah, I want to talk about why that price action might be where it is. I think that's maybe the concern here when you're looking at this stock is it had so much potential. It was going fairly strong just a few months ago, and then it's really been on a kind of consistent downward trend. Why is that? What could be behind the pullback?
If I had to guess, I would say when I look at when the stock started to go down, it started to go down right around the beginning of September. And what started happening at the beginning of September? The Federal Reserve started lowering interest rates. So that was maybe a sign that the economy was going to start heating up, that maybe consumers were going to start seeing some more money that they were going to be spending, but they might be spending that money outside of the consignment area. So I think the idea would be perhaps ThredUp was going to be losing some of that customer base. But I'm not so sure if that was the right bet, if people were making that bet. I think we're going to learn more. The company reports earnings next Monday, and they report after the market closes. So I think that's going to be a big indicator on how is the company doing revenue-wise? Are they getting closer to profitability? The company has been, as I'm looking at it, they've been growing revenue year over year, or at least they did in the last quarter. They grew year over year, around 82 million for the quarter, and they're within striking distance of being a profitable company. So I think a lot of the pullback was just based on the fact that the sense was if the economy starts to turn around, a company like ThreadUp may not be as popular.
That's an interesting theory for sure. I think, providing as the target audience for this company, I think the one thing that people who like these consignment clothing, they usually like it for a number of reasons. One, maybe they're
Exactly.
looking for the more unique clothes, but a lot of times there's that more green mindset. Instead of letting clothes end up in the landfill, it's reusing perfectly good pieces of clothing. So there's some people who are maybe interested in this company for those reasons. Others, it's a money saving reason. So
Yeah.
there's a lot of potential catalysts for this company that are more than just kind of where the economy is right now. Uh, and I do think that that's something to think about with this name. I also think it could be why analysts are so bullish on the outlook for this one. There is also competition. I don't know
Yeah.
what the stock is doing for Poshmark, but that's another similar name out there. They're not the only company doing this online. I do think that analyst outlook is hard to ignore of where they think that this stock could be headed.
Right.
And I also agree with you, Chris. It's really going to depend on where those earnings show up next week. Are we actually going to see that revenue
Yeah.
coming in or not for this company? Let's take a look back really quick before we
Sure.
wrap up here, talking about how they've done in the past. How have the last couple of quarters been for ThreadUp?
They've been beating expectations, both on the top and the bottom line. Now, again, they're not profitable yet, but the loss that they've come in, the loss per share has been significantly less than what's been forecast. And the revenue's been a nice beat. I mean, in the last quarter, they generated 82 million in revenue. The expectation was for 77.3, so that's a nice beat. The quarter before, they generated 71.2. The expectation was for 67.5, and so on and so on. So they've been having a nice history of beating the expectations on revenue. One of the things I noticed about this stock is, unlike what we just talked about with Vaxart, this company has 89% institutional ownership. And that's kind of where I was basing my Fed argument, was because when you see that much institutional ownership, there's probably a macro story that's driving the stock price down rather than just retail sentiment of, oh, we're scared. And I actually tend to agree with you. When I was doing some research about this company, I was looking at the overall consignment, the secondhand market, and there's data from a company called Global Data that forecasts the secondhand market will grow at a 9% compound annual growth rate through 2029. So the consumers that are more likely to shop for these stores aren't likely to stop buying there. And they have any number of reasons for doing that. Plus, I think there's probably room for more than one name in here. So I wouldn't be that worried about competition right now. And certainly it doesn't seem like analysts are either.
I really think this is an interesting name. And all three of these names, very interesting
Yeah.
concepts and unique to see where the price targets are, at least on Grab and ThreadUp too. Both of these names have been significantly higher in the past. So for them to be the under $5 category makes them interesting names to look at right now. Chris, thank you so much for this list. If you like learning more about these small cap names that are lower priced but have a lot of strong future growth ahead of them, make sure to check out the video Chris and I did just a few weeks ago with 5 other names that are all having a lot of strong growth in their futures. Check out that video here.